For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Bursa Malaysia has been part of the Malaysian economic growth for over 4 decades. We have been working relentlessly to create a transparent, efficient, and vibrant stock exchange.
While we've been working at building a vibrant marketplace, inclusivity and contributing towards economic growth, we have also channeled efforts and resources towards supporting the community at large. Shares to Share is one such effort, which has been developed to create positive impact towards society and the environment. To put it simply, Shares to Share is a transparent and easily accessible facility that enables investors to donate their listed securities or proceeds from the sale of their listed securities towards charity through Yayasan Bursa Malaysia. You can donate odd lots or even board lots. The funds from the sale of these shares will be channeled to approved charitable organisations and their respective initiatives or projects.
Bursa Malaysia has waived its portion of the transfer fee, clearing and trading fees for all transactions that are conducted under Shares to Share. The participating brokers of Shares to Share have also agreed to waive their portion of the transfer fee and brokerage. The charitable organizations that have been selected have undergone the necessary due diligence process and have been duly approved by an independent selection committee.
At least 500,000 Malaysians live with some kind of disability. They are most of the time being left behind. We need to empower them, otherwise they will continue to be the liability. A lot of human resources wasted from this program.
We provide a lot of support for persons with disability who are young adults and adults. We have a social enterprise called Project I'm Possible, where we managed to hire all persons with learning disability to work here. We have a cafe, bakery, weaving, and we have an art gallery.
Purity of thought, word, and deed, that is action, is very important to be really successful. We must know some skills to be able to help us then paperwork. The grant from Shares to Share will be used for, one is sewing, handicraft, classical dance, and so on.
Our patients have to be fed, they have to be looked after. We look out for any sort of disease they might develop, and also those unforeseen circumstances. Thanks to Bursa's initiative, we can be a little bit easy on our patients and their family members.
Donations will all be channeled to organizations that are involved in the sustainable development of Malaysia. The Shares to Share scheme offers you the chance to do so in a simple and effective way.
Bursa's Shares to Share allows us to do good by donating our shares to charities. You join us in making a difference to the society by donating your listed shares.
Shares to Share is open to all donors, individual as well as corporates or other types of entities. You can transfer your listed securities via Bursa Anywhere app at a click. For more information, please visit our Bursa Malaysia website.
All right, so hi everyone. So welcome to today's webinar brought to you by Bursa Malaysia and managed by LifeChamp. So my name is Carmen and I will be your moderator for today. And our session topic for today is timing is everything, using oscillators to time the market. But before that, we have a special guest from Sidrak joining us to share to everyone here a little bit more on what Sidrak is about. So please welcome Ms. Mingye to the floor.
Hi, thank you, Kamu. Okay, let me share my screen.
All right. Right, so over to you.
Okay. All right. Okay, right. Let me start. Okay, good morning, everyone. So my name is Meng Yi. I'm a case manager from Securities Industry Dispute Resolution Center, in short, CIDRAC. So I'm just going to introduce to you all what CIDRAC does. Okay, and some disclaimer here. So CIDRAC is a body set up by the Securities Commission, Malaysia. So mainly to act as a dispute resolution body for monetary claims made by individual investors or sole proprietors against members lah. So we are here to help resolve capital market disputes through mediation and adjudication without going to court. So why do we exist? We are a component of the investor protection infrastructure in the capital markets. So many investors think that the only solution when they are faced with monetary losses during their investment journey is to file a claim in court. But if today your claim is so small that it would be too expensive, as in like to engage a lawyer to file a claim in court, you may consider coming to CIDRAC. So actually, CIDRAC is an out-of-court dispute, alternative dispute resolution center for capital markets, product or services. So it's free for claims up to 250,000 ringgit. So it's less formal than in court lah. So CIDRAC is a one-stop center that handles capital market related disputes, and it also contributes towards enhancement of investor protection. So in CIDRAC, we also try to enhance investors' understanding of the market and their responsibilities for their investments. We are also independent and impartial in resolving capital market-related disputes. So who is eligible to file a claim? You have to be an individual investor or sole proprietor. And when you have a claim against CIDRAC members. So who are our members? Our members are banks, stockbrokers, fund management company, unit trust management company that are granted license by the SC. So for a full list of the members, you may access our website and see if you have a claim against, whenever you have a claim against an investment bank, you may visit our website to see if they fall under our list before you file a claim with us. As long as your dispute involves capital market product or services and if it relates to a monetary loss. So, okay, if unfortunately you have during your investment journey, you have encountered disputes with your investment bank, you may have to lodge a complaint with the relevant financial institution first before you come to CIDRAC. So after you have lodged a complaint with them, they will have to do an internal investigation for 90 days. So let's say after 90 days and they have not responded to you, you may still file a claim with us lah. So this is our jurisdiction. So any capital markets products that involve securities, which is shares, warrants, derivatives, or PRS, fund management, and unit trust. So how do you lodge a claim? You may download the dispute or claim form from our website. And then after filling up the website, the claim form, you may scan or take photo and then send it to CIDRAC. And then a case manager will be assigned to handle your claim, and then we'll contact you to ask for more information. So what is CIDRAC's process? So like what I said just now, after you file a complaint with the member, so the financial institution, they have 90 days to resolve a complaint through their internal investigation. So after or within the 90 days, you have received a final reply from them and you're still not satisfied, you have 180 days from the final reply to file the claim with CIDRAC. So after you file the claim with CIDRAC, this is where we call case management. We will assess the eligibility and merits of the claim. So we will also contact both parties, the member and the investor, to understand the case further and try and help to resolve the dispute at this stage. If we think that it's eligible, then we will proceed to mediation stage. This is where a certified mediator will be invited to facilitate communication between both parties and try and encourage open and constructive discussion. So if mediation is successful, a settlement agreement will be entered into and the dispute will be resolved there. If it's unsuccessful, then we will proceed to the next stage, which is adjudication. So what happens in adjudication is an adjudicator will hear from both parties and issue a decision. So let's say after the decision is issued and the claimant, the investor, is not satisfied with the decision, he may accept or reject the decision and pursue other avenue. So these are our contact details, our email address, and our phone number. So you may contact us to ask for more information if you think you need. So that's it from me. Thank you.
Sharing. So let's move back into the main agenda right now. Let me just put up my slides. All right, so once again, the topic for today is timing is everything, using oscillators to time the market. So before we proceed any further, just allow me to do a little bit of disclaimer. Please be reminded that everything that is shared in this session today is mainly for educational purpose. By no means that we're providing you any advice to buy or sell any forms of securities. You are 100% liable for any investment decision you make. Okay, great. So today we are very honored to invite the CEO of Sigma Wealth, Ms. Pauline Young, to share insights on how you can utilize oscillators effectively to time the market. And a little bit of her background, Pauline Young is a licensed financial trainer certified by the Malaysian Securities Commission Financial Planner Representative and Bank Negara Financial Advisor Representative license. She's also a course trainer and public speaker at Financial Planning Association Malaysia, Symphony and Bursa Malaysia. Over 25 years in education, she has accumulated over 50,000 students and conducted over 200 large-scale corporate courses. Pauline is also a best-selling author who has published 6 books on investment and financial planning, and her articles have appeared in financial magazines such as Personal Money, Money Compass, and many more. So with that being said, please welcome Ms. Pauline to the floor.
Hello, thank you, Carmen. Hi, good morning. Good morning, everyone. Oh, I see that Edmund, good morning, and Troy, good morning, and Yesu, and everybody is here. Good morning. Okay, today, yes, I'm going to share my screen now. Okay, so this is my PowerPoint. Okay, so you can see my PowerPoint, right? So before I start, I wanted to ask you guys, how many of you here has technical analysis background? So if you have TA background, you put a yes. If you do not, you put a no. Okay, I just want to know how many of you have TA background. Okay, so let me see. Some majority say yes. Okay, some say, few of you say no. Majority of you say yes. Okay, and more and more. Okay. The reason why I asked this question is because in order to time the market, okay, so today's session is timing is everything. So we are going to talk about how to time the market. So we want to time the market. At the same time, we want to be as accurate as possible, but sometimes it may not be so accurate. But however, if you have the TA background, okay, if you have the technical analysis background, you can apply the TA together with the timing, and then it will be more accurate. It will be enhance your accuracy. It will not be 100%, but then at least the TA knowledge that you have can enhance your accuracy. Okay, so that is why I asked this question. But even if you do not know, it's fine, because I'm going to teach you some simple indicator where you can get from the website, okay? Some simple indicator, and then some tools, and then you can apply, and then you can also see when is the bottom, when is the top. So it's very simple, okay? So yes, today's webinar is recorded. So it will be uploaded from the live channel as well as Bursa Malaysia channel, YouTube channel, okay? Yes, you have to look for Bursa Malaysia YouTube channel. Okay, so here is the content. So we're going to look at the some brief introduction, and then only we look at the oscillators. okay? And then the application of the oscillators like RSI, stochastic, and how we apply onto the cycles. And last but not least, we will also understand the functionality of ETS as a tool to practice trading in a simulated environment. How nice. Okay, so after we have covered this, then I'll bring you to our ETS, where I'll show you how to use the virtual money to trade. Okay. First, we have to learn how to measure the cycle. Okay, now before I talk about it, right? How many of you have heard about planetary cycle? Planetary cycle. How many of you have heard about planets by looking at the stars, like the planets, like the moon? Okay, some traders are looking at the timing as well. Anybody here who have heard about planetary cycle or the moon trading cycle? Anybody? If you have yes, you put yes. If no, you put no. Okay, so majority say no. Okay, don't worry. Oh, some say yes. Oh, very few. Only one person say yes. So no, no, no. It's like, oh, no way. I have never heard about it. Okay, never mind. You can Google about it. We are not going to talk about the stars and the planets and everything. Okay, so it will be too complicated. What we are going to do is a very beginner level, whereby we use the technical indicator, okay, to see the bottom, to time the bottom as well as the top. And but however, although on the surface you saw that, oh, that's very easy, that very simple, you look at the indicator, that's about it. But what I want to tell you is that behind this simple indicator that you see, right, behind it, there are a lot of statistics involved. Okay, and the statistics will require some of the technician to use the knowledge of the planet's cycle to calculate the timing. Okay, but however, those are the more advanced level. So we will I want to share with you is that simple technical indicator, okay, to apply together with the chart so that you can see that, oh, that's very clear bottom that we see. Maybe that's a good time to enter. Okay, and in each of these bottom is just entry, and then it may not be 100% say that, oh, it's an absolute bottom, it's a final bottom. Sometimes when you have a bottom, right, you can even have a subsequent low, okay, which is another bottom. Maybe a few weeks later you have another bottom, or maybe 1 month later you have another bottom. Okay, but nevertheless, that indicator will tell you that during that time it will be a bottom. Okay, so at least for short-term trader, at least you know that, oh, that's a bottom, a short-term bottom whereby you can enter. Okay, so I'm going to talk about the cycle. As you know, the cycle it will be moving in a repetitive manner. Okay, a repetitive manner meaning that you will the prices will go up, and then it will come down, and then you'll go up again, it will come down again. So if you are on the uptrend, you'll be cycling on the way up. If you are on a downtrend, you'll be cycling on the way down. Okay, so it will be in cycle. So no matter whether you are on the way up, horizontal also possible, meaning that you are cycling on the horizontal side. So no matter what it is, right, you are always moving in a cycle. Okay. Sometimes the cycle is show short in period 2. Yes, that's right. Okay, but however, if it depends on what chart we are looking at. If we are looking at a daily chart or a weekly chart or monthly chart, the monthly chart, the cycle will be a bigger time frame. Okay, meaning that you are looking at a macro view. You are looking at the swing, a major swing trade. Okay, so if you are looking at like a 15-minute chart, 5-minute chart, and very short time frame, this cycle of course are lower, because within the day you also have the cycle within the day. Some people see that the morning is more volume, and some people see that the morning is a greater time to trade. Okay, so the different time there is also a cycle. So you just have to look at the chart, and then you can spot the cycles. And nobody know what is the bottom. Later I will share with you, okay? Sing hot. Later I will share with you. It's not too difficult. Okay, so the cycles happen in anywhere, in the nature, in everywhere. So for example, you have the crop cycle, okay? So every year the crops, they also have run into the cycle. The weather also have cycles, the living things, the product life cycle, property market cycle. Wow, how interesting, right? Property market cycle also have a cycle. Now, about the property cycle, I have to share with you that this year and next year, usually the year ending with 3 and 4, like 2003, 2004, 2013, 2014, 2023, 2024, 1993, 1994. So this kind of years, right? The property cycle tend to be up. Okay, so how many of you here this year you are buying or selling a property, or either you're already in a S&P, or you are seriously looking for property, you are looking at investment in the property? How many? Okay, how many of you are this year, particularly this year, you are really looking at the property market? Some say property counter, okay, which is also very true. And then some say yes, okay. So when I ask this question this year, right, I see many people tell me yes, okay, and that is because the sentiment is that they are looking at things started to improve, and then they are looking at the prices started to pick up, and also because of the environment, okay, because of the special economic zone between Singapore and Malaysia. So certain area, the property seems to be more hot, okay, and also you see a lot of new launching coming out. So you see you are bombarded with a lot of advertisement and whatever. So you tend to have the idea or the feeling or the sentiment of investing into the property, okay. But is it good or bad? Okay, that one I leave it to you, because a lot of the time it depends on the price and the location, okay. So, and we also have the commodities cycle. The commodity cycle, like gold, the oil, and all these, they also run through their cycle, and the stock market cycle, which is why we are here today. We want to understand how does this stock market works, and also the economic cycle. The economic cycle hand in hand with the stock market cycle. Okay. So here we do see that there are cycles here. You have the crest, which means the height, and then you have the trough, which is the bottom, and then you have the phase. The phase means at the 20 here. At the 20 here, that's the phase 20, phase 40, phase 60. So which is the point in time, the point at phase 20. And you have the amplitude. Amplitude is the height between the zero line and the top, okay, which is the height. And you have the point of inflection. So these are terms of the cycle, okay. You do not need to memorize these terms. Just explain when we are looking at cycles, there are so many perspective of looking at the cycles and the length. Particularly, we are more interested in knowing the trough to trough, the length, the peak to peak, okay, the crest, and the trough, the low, okay. Especially if we are value investors, we want to buy and hold, and then for a longer time, we want to really buy some good value, fundamental blue chip stocks, and then we want to hold for a longer time. So we always want to see that when is the bottom, okay, and the major bottom, and then we wanted to buy cheaper, okay. So I can tell you now is the bottom, okay. Now is a good bottom that we can accumulate, okay. So there are these are the 4 famous cycles that I will briefly talk about it. So the stock market cycle, so this one you know about it. And then the next one is this US presidential cycle. The reason why I show this is because whatever happened in the US market will impact Malaysian market, okay, because this whole world is all connected. usually whatever the sentiment that you see in Malaysia, sometimes, of course, we have our own internal factors. We also have the US factors. So if, let's say, yesterday US was doing very well, so today the sentiment will pull up. Okay, so you see that today you can feel that the sentiment is improved. And so how does this work? So for the US presidential election, there are 4 years, there is one election. So next year, 2024 will be the US presidential election again, 2024 November. So people actually use statistics, okay? By looking at the statistics, they want to see that which year of the presidential election the US stock market will be higher. So people actually see that the 2024, okay, 2024, which is the year whereby the last year of the current president, which is Joe Biden. Joe Biden, the next year will be his last year. So by the next year, 2024, it will be the 4th year. Okay, and when we are looking at this chart, we know that usually when it is the 4th year, the US market tend to be, okay, it's not 100%, but statistically speaking, tend to be on the high side. Okay, so it could be top up in the first half of the year. It could be top out in the second half of the year of next year. We do not know. Okay, but nevertheless, there is a chance, or there is a possibility that next year you see that the US market may be running to a top level. Maybe it's a low top, or maybe it's a high top. We do not know. Okay, by technical analysis we can see. Okay, so that's why sometimes you know the timing is around there, but then you do not know how high it is. So in order to know how high or how low, you have to look at the technical analysis. So that means you know the timing by looking at the cycle, and then you have to apply the technical knowledge, TA knowledge, and then combine them, and then you try to see where is the level. Okay, and sometimes you need to having some close monitoring, because as long as it didn't break the lower low, it is maintaining. So say, for example, during a negative sentiment, for example, the last month, okay, last month we had solar eclipse and lunar eclipse. Now, for some traders, right, they will look at the solar eclipse and the lunar eclipse month as the month of volatile months. Okay, so October, last month was October, now we are in November. So October month, we had solar eclipse in the mid of October, 14th of October. And then we also have a lunar eclipse on the 29th of October, which is just a few days ago. So these 2 days, did you see that the stock market tend to be more volatile? Did you see that the investor sentiment, investors' mood tend to be more emotional? How many of you feel that you can feel it? Okay, how many of you feel that during the month of the October, mid-October towards the end of October, you felt that the stock market sentiment was moody, negative sentiment? How many? If you feel that, okay, if you personally seriously feel it, you say me, or you say yes. Okay, let me see how many of you. So I see that okay, is that like that. Rudin is also like that. Edmund is also like that. Kok Lung is also like that, and David also like that. Moody, yeah. And Edmund said people getting more emotion, yeah. Eugene also say like that. SC also say like that. Okay, so some people say no feeling. Okay, it's fine. Okay, Kok Lung say no feeling. Okay, Kok Lung, how many years of are you in the market? Are you less than 1 year? Kok Lun, are you less than 1 year of investment experience? Kok Lun, less than 1 year. Okay, so more than 8 years, 6 years. Okay, are you more on the value investing? That means that you don't trade so much, you buy and hold, that kind. Okay, so what is your style? Are you on the trading style or you are investing style? speculating. Okay, so if you are speculating, then you will be able to be very sensitive to the market. The market was quite challenging for the last few weeks, especially the war broke out in on the 8th of October. Okay, and then suddenly everything seems to be the AI bullishness, the property market bullishness all gone already, and then suddenly everybody was very careful. Okay, intraday trading mostly. Okay. So for those who are really too short term, like intraday trading, right? Then you are you may not, because you are more onto the really short term. You just look at the points. So it was so short term until you just look at the points, and then when it hit, and then you sell low. So you don't really look at a bigger picture. Okay. And Ern also say no. Okay. Leo says that value investing. Okay. Value investing, then the more you need to look at the timing, because sometimes the timing you can save some money, okay, if you enter the right timing. So here we do see that there is a possibility, okay, but it is not absolute, but there is a possibility. And also we see that the US presidential, right, they will tend to have under either the Democratic or the Republican under the US presidential, there are some period whereby they are more volatile, tends to have more crashes. So these are who? Reagan, Bush, Nixon, these are Democratic or Republican. You see, the gray color ones. The gray color ones are Democratic or Republicans. What do you think? The gray color. The gray color, are they yes, okay, the Republican. So usually when you are the president under the Republican, right, it will tend to be volatile. They tend to have some crashes. Okay, some tend to have some crashes. So currently, which is under the Biden, we also saw the crash, which is last year, was a very major decline. Okay, so which means that this also sometimes it happen, and then sometimes it may not happen. So it is not 100%, but statistically showing is that every time it is Republican, it does show some big correction. Okay, volatile, emotional, yeah. So here we are looking at the 17.6 years of the market cycle, which is the stock market cycle, 17.6 years. So this one is almost 20 years of a cycle. So it's a very long cycle. So people actually come up with the statistics, and then they calculate that about 18 years, the US seems to be having major cycle. Every 18 years seems to have major cycle. So the secular bear market was happened in the 1920s, where we had the Great Depression, we had the Second World War, and then it was very chaotic. So those are the secular bear market. Then after that, we have the secular bull market. And then here we also have the secular bear market in the 70s. So in the 70s, we have the oil crisis, one after another. So after the oil crisis, you have the high interest rate, and then you have the Vietnam War, you have the all the bad events one after another. So those are the bear cycle. So when you are in the bull cycle, the investment environment seems to be better. So in the 80s, seems that everybody is enjoying your Walkman, your electrical appliances, your CD also Walkman. Okay, so that kind of a thing whereby so all the electrical appliances, everybody was crazy about it, and those time were the Japanese goods was everywhere, and everybody wanted to learn Japanese, and then they look up to Japan. So those are the 1980s. And then the 2000 was also a secular bear. It was the subprime crisis, the look east policy. Yeah, the 80s was the look east policy. Yeah, that's right. Those were the 80s. So the 2000 was the subprime crisis. So you had some crashes there. So now it seems that we are now in a bull market cycle. So although in the bull market cycle, right, we do see some crashes. So here there is a red color. So the red color means that these are the top. Okay, so here we do see that this top is looking at 2023. But however, 2023, do we have a top? Okay, so we do not know until next year, the following next, and then we will know whether this year we have a top. So if let's say next year, 2024, the high is lower than this year, so meaning that 2023 was a top. But if let's say next year, 2024, the high was actually higher than the 2023, meaning that the S&P shot up to 4,800 points and beyond, then maybe next year will be a top. But nevertheless, these 2 years, okay, either 2023 or 2024 looks like it's going to be a top. And the bottom, how interesting, because we want to buy at the bottom, right? So you see that the bottom here, it says that it's 2025. But however, there could be plus or minus, okay, plus or minus 1 year. So if it didn't happen in 2025, perhaps it will happen in 2026. Okay, so that kind of a thing. So here you do see that the 2009 bottom, 1989, 1974, and then 1954, 1938. Okay, so 1974, it does look like a bottom. And 2009, it was a bottom. And will the 2025 be a bottom? We are yet to see, okay? So if it, let's see, let me answer this question. It's for bottom and it's time to buy, what stock to do? Okay, usually these are the economic cycle as well. Usually this will coincide with the economic cycle. So which means it's a macro situation whereby all the stocks will be down, okay, including the blue chip stocks. So if it's a major correction, the best stocks to buy will be the blue chips dividend stocks. Okay, so you will look nowhere but to aim at the blue chips dividend stocks. Basically, you just aim at the blue chips dividend stocks, the rest you don't look at it if you are the value investors. Okay, unless you are like speculator trader, then if you are speculator trader, any environment is good for you because you can always speculate. Okay, but if you are really like a value investor, you want to buy and then keep. So these are the market bottom for you to buy the blue chip stocks. Okay. But of course, we have to combine with the technical analysis. So the technical analysis show us that the 2020 was also a bottom as well. And now it's also a bottom at 1,400 isn't now a true bottom because historically, how often, if you will look at in the future, are we going to stay at 1,400 forever? I don't think we are going to stay there forever. Okay. Yes. Looks like US going to the top, but Malaysian market not following. Yeah, David. Yeah, right. Okay. You see, the US and the Malaysia sometimes, although on the surface we are in sync, okay, but however we do have our own internal politics. US also have their own internal politics. So what we are seeing is that when the US was having a bull run, okay, Malaysian market may not have bull run, okay, and then when the US market is having a downfall or some weak sentiment, Malaysian market maybe is slowly on the way up. Okay, yeah, it could be. Okay, especially if we are looking at a lot of the foreign direct investors are coming in, and then we are looking at the economy as a whole is progressing well and then improving, recovering well. So perhaps our market will be slow and easy and slowly recovering. Okay. Okay, so here we are looking at, usually when you're looking at the cycles, right, it'll be good if you can pick out a 100-year chart. Now, for Bursa Malaysia, we may not have 100 years, definitely we do not have, but we have 40 over years. So we can also look at the Bursa Malaysia in the 40 years, okay? And in this case, this is the Dow Jones Industrial Average, which is 100 years. The S&P also have more than about 70 years as well. So where can we find? Okay, I'm going to share with you this website, okay? And this website is called tradingview.com, okay? I can give you this link, or you can just simply type tradingview.com and then it will come to here. And what you need to do is to register. So in order to enjoy the free charting service, right, you have to register using your Gmail, your email address. It's like a one-touch button. Okay, it's very fast. You just prompt you register. Okay, you register through your Gmail, and then you will come to here. And then once you come to here, you see that these are the chart. Okay, so some of you who do not have any TA background, so I'm going slowly to introduce to you what is a chart. A chart is where you can see that this is the price, and then these are the time frame. You see 2023 March, May, July, September. Okay, and you can drag this down. Okay, so you see I'm dragging using my cursor to drag this down so that I want to see a bigger picture. I can change this is a daily chart. I can change this to a monthly chart so that my chart will be 1 month, so that I want to see more years. Okay, so once I change to a monthly chart, you see I keep on dragging this. You see that the years here are more clear to you now. Okay, because it's each of the candlestick is representing by 1 month. 1 month, 1 month, 1 month. So 1 year only have 12 candlesticks. So then you can see that 12 candlesticks is 1 month. Okay, I mean 1 year. So here you see a macro view already. So you reduce further, and then you shrink this down, and then you can see the whole picture here. Okay, you can see the whole picture. So we started in the 1970s, 1977. So the chart starts here, 1977, and here will be the current situation. Okay, so from the beginning until now, so this is our KLCI Bursa Malaysia KLCI index. Now for the cycle, right, the timing cycle, right, it will be good if we apply onto index and commodities. It will not be so accurate if you apply into the individual stocks. Okay, do not apply into the individual stock. It didn't make much sense. It's because we look at the economy as a whole. The individual stock is too small. Okay, so we won't look at the individual stock. So we are looking at a big picture. So this timing is looking at the macro view, looking at the economics, looking at the index, looking at the commodity. So it's looking at a big picture. Okay, it's not a small picture, it's a big picture. So from the big picture, then you sense, or you get the sense of where we are now. So here we are looking at, this is where we are now. Okay, so which means that we came from here. Okay, so these were the top that we had before, 2014, 2018, and then now we are here. Okay, so if you were to look at this situation, right, now we are in 2023. Doesn't this look like a low here? Okay, so it does look like a low here. So we are looking at a low here, and then forms some consolidation, and then before it break out. So you just now I said you have to apply technical analysis, right? So here I'm going to apply the trend line here. Okay, to give you an idea, in order for you to see that the chart has a breakout, your share price, in this case will be this index points. The index has to be break out of this line. Okay, so if one day going forward, 2024, let's say it can break. So that will be a good news, a very, very good news. Could it break down? Unlikely, unless we have a war here. Okay, I don't think so. Okay, it's highly unlikely unless we have a really, really bad black swan event. Okay, either a war or anything, which I don't see now. Okay, which I don't see now. Okay, anyway, currently I believe that our current cycle, right, is running the 1993 cycle. Okay, whereby we are looking at a lot of the foreign direct investors coming into Malaysia, and then we are trying to build our GDP growth. Okay, you will see a lot of foreign firms coming in. Okay, so just like in the 1993, and also during that time, you see that the properties and the constructions seems to be moving. The engines are moving. Okay, the properties and the constructions. Okay, so that's how I look at it. Okay, it's my personal opinion. Can call technical correction lower than the 1997 due to the ringgit. 1997 is this 200 point, you know. I don't think we will be able to go down to 200 point level, which means that the good stocks like Maybank, CIMB Bank, and all this will go to almost like below one ringgit. So I don't think so. Okay. So those are too far. Okay, so I don't think but who knows, anything can happen, right, if there's a war. But at the moment, I see that it's highly unlikely. Good to buy, yes, I think it's good to buy now. Okay, I personally think that it is good to buy now because this low has been building this low for quite some time. Okay, so you see in the past, right, every time when there was like a big correction, the correction take about the most is about 1.5 years, and then it will go higher. Okay, so this one is go like here is 1998. Okay, and then it go higher, and then there's a double dip 2002 down, and it go higher, and then another dip is 2003 down, and after that it go higher and higher. Okay, so this correction, right, we are actually building this correction here. So this 1998, right, is actually our 2020. Okay, so I see that this one, this point here, okay, is same as this point here. And then you see subsequently it takes a few years for us to build our bottom. So now we are building using a few years to build this bottom. Okay, we are about to break out already. So if you to use this history, right, and then you see that the breakout happened in the year 2003. Okay, so we will also have a breakout. Okay, so that's why you have to use technical analysis. By using the technical analysis, you are trying to see when will be the breakout. Bursa index keeps changing the list of the companies. Okay, is it accurate? Okay, but nevertheless, it will be the top companies, the top largest market capitalization company. The majority of them are still there. Okay, so a few of them will be in and out, in and out. So maybe the growth stocks last time was in, then out, and then the technology stock maybe will be in and out. Okay, so but however, the majority banking stocks, which is measure the economy of the Malaysia, the banking stocks are still there. The major consumer stocks are still there. Okay, so so you do see that by looking at this, you can see. Okay, so let's continue. So later I will introduce to you the indicator. Okay, but let me go through these simple things first. Another cycle is called the contractive cycle. Okay. Somebody study index is annually or quarterly review. I think it was half annually every 6 months. If I'm not mistaken, I think it's every 6 months review. So it will be reviewed. Okay, so sometimes they say, oh, no change. This study component, no change. Sometimes they say, oh, I'll take out one, add another one, you know, like that. Okay. So here we are looking at the 60 years of a technological cycle. Now, this 60 years of a technological cycle, it gives you a big picture of where is the money. Okay, where's the money? The money will go to which area where they have the most technological innovation. Say, for example, now. Okay, so now if I were to ask you, if you look at the large companies in the world, so the large companies in the world are what kind of companies? Can anybody tell me? I'm talking about the global scenario. I'm not talking about Malaysia. I'm talking about global. Okay, globally, can you name me a few large companies? Yes, very good. So you are right. Okay. So David, as Edmund Fang, you are right. So these are the big tech company. Okay. The big tech company will be the companies that are dominating the world now. Okay. And where the money is. So you'll be surprised if you look around your own personal belongings. How many of you have a few gadgets, computer gadgets, like you have a PC, you have an iPad, you have a mobile phone, you have a laptop, you have a lot of these gadgets, okay, mobile gadgets. One person, you have a lot, okay? And then, and if you look around, you will also see that people now are driving electric vehicles. Okay, how many of you are also thinking of buying an EV car? How many of you have already drive an EV car? How many of you are seriously thinking of buying an EV car? Okay. Now, if you are buying an EV car, right, think about it. Okay, thinking of buying. Okay, think about it. Okay. No, okay. Why I say you have to think about it? Because now there is a lot of technological innovation in the batteries. The batteries keep on changing. Now, if you to wait first, smart, okay, wait first. If you to look at the technological innovation for the electric vehicles, right? We compare to the previous old cars that the original, like traditional cars that we are driving. The traditional car that we are driving, right? What is the most important component? Like if you are driving a Proton, you are driving a Nissan, Toyota, okay? What is the important engine? Yes, not the petrol, the engine, okay? The engine is the most important. But if you are looking at the EV cars, what is the most important? Because you do not have engine anymore, right? So what is the most important thing? Yes, it's the battery. So now everybody is fighting with the battery. So now what is the latest breakthrough in the battery? Does anybody know what is the latest breakthrough? Like what is the name of the battery? Is it the ion lithium or is it the sodium battery or what is it called? Okay, so I do see that some of you mentioned sodium ion. So now Toyota, now Tesla, all these traditional EV car all are lithium battery. Some even say lithium solid state battery. Okay, so that solid state battery is an improvement from the original lithium battery. But now the sodium ion battery, there's an improvement. Okay, the improvement is announced by Toyota recently. So Toyota recently announced that they have a solid state sodium ion solid state battery. So meaning that they are not using lithium anymore. Okay, they are using sodium. And then sodium together with the solid state. Okay, so meaning that it is more powerful, more efficient, and it can per charge, the range is about 900 over miles. 900 over miles is about 1,500 kilometers per charge. And the per charge is less than 10 minutes. Wow, fantastic. So isn't it you have to wait for Toyota? Okay, so if you are buying, seriously thinking of buying, okay, I think we better wait for Toyota. So, but nevertheless, we are looking at this kind of a technology is always changing. So we have to keep up with all this technological innovation so that we know where to park our money with. Okay. So one thing, some of you mentioned AI. One thing is for sure is that AI technology is here to stay. So meaning whichever industry that we are looking at, we will require the AI technology. So which means that if you are looking at buying into the tech stocks, definitely you have to look at AI chips, okay? And that will be the NVIDIA, the AMD, the Intel, and these companies, AI. And these are the American, okay? We also need to also focus on the China tech firms because in terms of technology, right, these two countries, the China and the US, these two are the leaders of leading the global, okay, leading the whole world. So besides the US tech companies, right, we should be also looking at the China tech companies. So when it comes to the AI technology, right, so which China tech companies are worth for you to invest in? What do you think? China tech companies. It will be Alibaba, Tencent, and Baidu. Okay, I will look at these three, Alibaba, Tencent, and Baidu, in terms of the technology. Okay, Meituan is a commercial e-commerce. So e-commerce, I personally feel that they are too competitive. Okay, and Chinese player, non-listed EV maker, BYD. BYD also can. Yes, you are right. Okay, and SMIC is the chip manufacturing. Yes, correct. And KATL, the battery. Yes, correct. Okay, so these are the leader of the industry. Okay, so CATL is they are leading the industry, the battery industry. Okay, some say UMW, Malaysia included in the list. UMW. Okay, Malaysia, not really, because when we are looking at Toyota stock, right, it has to be Japan, made in Japan, not the UMW, okay? Because our UMW also have other things as well. Okay, Nikkei, nickel, manganese. Okay, nickel manganese will be the ingredient, okay, will be the ingredient for the battery. The blade battery, BYD. Oh, I see. Okay, so that is another name. So it could be, okay, I do not know, okay, whether they are delisting, I'm not sure, okay. It depends on whether they have any core products there. Okay, is gentle reminder to post the question in the Q&A. Oh, gentle reminder to post your questions in the Q&A box, okay. And UNW will be under Sime Darby. If they were to buy enough of shares, maybe one day, okay, but now not yet. Okay. So we are looking at this kind of a major cycle that we need to take care of. So next, I want to look at the oscillator. So the oscillators, there are two types, the stochastic and the RSI, that I want to introduce to you. So for those of you who are new to the technical analysis, so this stochastic and the RSI, they are like an indicator. Just now I showed you the website, right? So that website, there is one click for you to click this indicator and then it will pull up. Okay, so later I will show you. So this is the chart whereby this is the stochastic oscillator, meaning that it will move like a cycle as well. Just when here you're moving as a cycle, right? Here your cycle is clearer, okay? And then this one is the how we interpret the cycle is that it has a 0 to 100% scale here. Okay, it has 0 to 100%. So we will usually identify the 20% as the lower band here. Okay, so this 20% meaning that if your oscillator stochastic is below the 20%, it is oversold. Okay, so here will be a low point here. So here will be also a low point. Here is also a low point. Okay, so below 20, it's oversold. Above 80, overbought. Okay, so you see this top tally with this top tally with this. So basically, by looking at the oscillator or the stochastic here, you can see the top and the bottom mirror the shares, okay, mirror the stocks. There's also the buy signal, okay, the buy signal is given when the oscillator is below 20, which means that you are oversold, right? So you just buy when it is oversold. So below 20, you buy. And then when do you sell? You sell is when it is above 80, okay? So next, I want to talk about RSI, Relative Strength Index. So RSI, to me, is a more popular indicator than the stochastic. And that is because stochastic, you see that there are a lot of cycles. The RSI cycle is not so small, okay? The RSI cycle is bigger, so it's easier to use RSI. So the RSI, the formula is like this, okay? And the application is it also have a scale of 0 to 100%, but it is not 20/80, it is 30/70. So if it's below 30, oversold. Okay, so below 30, buy. So you buy around here. Above 70, you sell. Okay, so you sell around there. So you sell here and then you buy here. So you sell here, you buy here. Okay, so you see that the application of these two are very similar. Okay, it's just that the formula is different. If you look at the formula, this one, you are looking at the 100 minus 100 divided by 1 plus average gain during the up periods divided by the average loss during the down period. So you are looking at the 14 days. So now we are here, 2nd of November. So we are looking at the 14 days in the past 14 trading days. What is the average gain? Okay, so all the up days, you add together. Because among the 14 days, right, let's say there are 10 up days, 4 down days. So the 10 up days, you add together, average them, and then divided by the 4 down days, and then average the 4 down days. Okay, so you use this ratio. So that you know that on the past 14 days, right, what is the relative? Are we relatively more bullish or relatively more bearish? Okay, because if you know that the average gains are higher than the average loss, so meaning that we are on the way up. Okay, meaning that the value will be higher. Okay, so it will be higher. Okay, so if you have a lot of losses, of course, this one will drag this value down. Okay, so that's how it is calculated. And the stochastic, if you see that this stochastic is to look at also the past 14 days, and it is calculated by subtracting the low for the period from the current closing price. So now you are looking at the current price here, and then you minus the low, okay, and then divided by the total range of the period and multiply by 100. Okay, so meaning that you are taking your current price to minus the lowest point. Okay, so that you want to know what is where are you? Okay, where are you? Where are you in relationship to the last 14 days? So you are using the current price to minus from the low of that 14 days. So, but nevertheless, right, this also produced a line as well. And that line will also give you overbought and oversold. So that's how it is being calculated. But personally, I prefer to use the RSI because it is easy to use. Okay, so there is less up and down. Okay, there's less cycle, and then it will be less signal as well. So the buy signal is when it is below 30. The sell signal when it is above a 70. Okay, so now we are going to apply this time cycle. Okay, before I show you the chart, I'm going to explain to you. So the cycle identified. So first, you need to identify the cycles in the market, okay, that you are trading. So for example, if you are analyzing the daily price data, you may identify a recurring of a 20-day cycle. So meaning on in step 1, okay, if you are in a step 1, you pull out a chart. So when you pull out a chart, you want to use the daily chart. Okay, the daily chart will be the base chart. So the daily chart, and then you try to see where is the cycle high and cycle low. Okay, that is recurring every 20 days. And where is the top and where is the bottom, and you try to measure the top to top, bottom to bottom. Okay, so and then you apply the RSI, and then the RSI, then you look at whether it is overbought or oversold. Okay, so this is the cycle here. So I'm going to share with you this chart. So normally I will look at the index. Okay. Oh, there's a question. Are these indicators good for short-term traders, or is it good for long-term traders? It can be good for short-term. It can be good for long-term. Why? It depends on what chart, what time frame chart you are using. If you are using a 1 hour chart, you can also see that. Okay. So for example, I pull out the indicator. So the indicator is from here. Okay. You hover your mouse around here, and then you can see that, oh, indicator, metric, and strategies. Okay, you click. So you can type RSI, okay? So my RSI is my favorite, so I just click. So this is my RSI, okay? And currently I'm showing you the monthly chart now. Whenever we want to analyze a major top or major bottom, right? We always go for the monthly chart. Okay, I repeat. Whenever we go for a major top or bottom, we always go for the monthly chart. Okay, I want to repeat, it's a monthly chart. Do not look at the daily chart. Okay, you can look at the weekly chart, but the monthly chart will be the most important because you are looking at this 30-year, 40-year kind of a life time frame. Okay, you're looking at 50 years, 40 years of a time frame, you have to look at the monthly chart. And from the monthly chart, you can tell. Okay, so I will erase all this trend line first. Okay, you can tell the last recession, the previous recession was 1998. Okay, and then we do have a bottom here. And then the 2008, 2009, we do have a bottom here. And 2020, we do have a bottom here as well. So can you see it? So how interesting, right? So here usually I will use this vertical line. Okay, you go for the vertical line to identify the bottom. You see, you click the bottom. Okay, you have to click this again, and then you click the bottom. Every time when you need to click the line, you have to click this again, and then you click this bottom. Every time you click this again, you click this bottom. There is also another bottom here. But this bottom is higher low, okay? It's not below the 30. If you happen below the 30, right? How many times in the last 40 years, how many times? 1, 2, 3, 4 times. So every 10 years, you have one. This one I remove first. So every 10 years, you have one. So if you want to spot the next bottom, right? Isn't it you just need to minus the years apart and then try to see what is their years apart. So for example, this is 1998 minus 1986. So this one is 13 years apart. Okay, so here is 13 years apart. And then here is 2009. And then this is how many years? 11 years apart. And then here you have 2020 and then 2009, also 11 years apart. How interesting, right? So we are looking at the cycle, right? Can be so repetitive. Okay, it can be so repetitive. So if I were to ask you when could be the next cycle low, major cycle low, can anybody tell me? You just punch in your calculator. Can anybody tell me when is the next cycle low? Anybody? 12 years time. Okay, it's around 11 to 13 years. Okay, so you can say 12 years, you can say 11 years, whatever. So what, 2020? No, the next yes, 2032. Okay, the 2031, either 2031, 32 is around there. Okay, but roughly you know that somehow you know that it's around there. It could be some major event happening. Okay, so then you can plan, you can start to plan. So if you are planning to buy or sell your stocks, your shares, or your properties or whatever, sometimes you have to rely on this to give you an idea of when is the the next recession. And then so before the next recession, isn't it you need to sell your properties or something like that? Okay. We see the bottom. Can show the top cycle. Okay. The top, right? Because this is on a rising chart. Okay. So when you are on a rising chart, the top is never the lowest. I mean, you always have another higher high. Okay, you just like the low. The low you can have a higher low. So the high you can also have a higher high. So the high is here. Okay, you see when it is above the 70, especially this one, it is very obvious. Okay, and then you also have this one as well. Okay, so this one is also top, but this one is slightly off. Here the stochastic is showing you the top here, and here it go up to here. Okay, and here we do see the top eye there. Okay, and here it is also touching the top there as well. So here we do see some top and some top, but nevertheless these are the top, whereby sometimes it may be lag a little bit. You see the price, the top is actually a little bit lagging. Here they top up first and then the price lag a little bit. Okay, in terms of the top, right, somehow it lag a little bit, although the top is there already, but there you are looking at the a further top. So what you can do is that every time when you see a top like that, you wait first. Okay, you wait first. So for example, here it is May 07. Okay, and then the top is actually at February 08. So you're looking at maybe 6 months to 9 months later. And this one is December 13, and this is August 14. So this one is also about 9 months. Okay, so 9 months later, it really top up. 9 months later. Okay, so which means that for the top, it will not be as accurate as the bottom, because the bottom is very accurate, almost in sync. But the top is like there's a time lag of 6 to 9 months. Okay, I would say that there's a time lag of 6 to 9 months. So whenever you see that the top here, probably you can ignore a little bit and then you can wait for another 6 to 9 months, and then to capture more gain on your hand. Otherwise, after you see the top and then you quickly sell, then isn't it you are like, oh no, I should have not sold it. Okay, you will be regretted. But nevertheless, this is just like a macro view. Okay, macro view is just to give you a direction. It's not an absolute. Usually when you look at the time cycle, right, I wouldn't look at it as an absolute entry or exit point for you, because the time cycle is just to let you know the direction and the time frame. The real entry and exit, right, you still have to refer to your fundamental analysis as well as your technical analysis. Okay, and if let's say you are a trader, then you look at the technical analysis. If you are the value investor, of course you have to look at the fundamental of the company that you are buying in. Okay, because this will only give you a macro picture. It didn't tell you each company. Okay, it's like a macro view. It gives you a macro view, but then which company you have to look at the industry and everything. But majority you have to look at the blue chip stocks. Okay, it has to be the blue chip stocks, none other than the blue chip stocks, because only the blue chip stocks, they will go together, the cycle together with the economic cycle. Okay, the blue chip stocks will go the cycle according to the economic cycle. Okay, so we can apply this onto the US stock market. Okay, now if you look at, just as somebody say, can it be a smaller cycle, right? Okay, so now I erase all these. Okay, I erase all these, and then I change to a daily chart. And then I enlarge this. Okay, so you can see that on a daily chart, right, there is also a cycle. Okay, you can even do on a 15-minute chart, 1 hour chart, also have a cycle. So what I want to say is that this cycle analysis, right, it is not like always have to be a big one. The big one is for you to see an overall view first. Okay, if you are looking at trading, probably you can look into the shorter time frame. Okay, because when you are trading, you can look into the shorter time frame, and then you can combine together with the technical analysis. That will be a very powerful tool. Okay, to combine these two together. So we can see that here there are also, we can draw this line, the vertical line, we can draw as well. Okay, so this is a low. We can draw this. And if you notice, right, we always have a double bottom. You see a double bottom, double bottom. So since you know that we have a double bottom, right, we wait for the second bottom, then you draw the line. Okay, you get what I mean? You wait for the second bottom. You see the RSI also have double bottom here. Same thing as this double bottom. Okay, so here also have double bottom, but here also have a little bit. Okay, so you see, I click the low at the second bottom, and I click one more low at the second bottom here. You see the second bottom usually is higher already. Okay, the momentum is higher, which means that the shares, the stock, the underlying stock is about to take off. Okay, because you have a higher low here. So this is about to take off. But nevertheless, you can see pretty clear. Okay, so here there is one bottom already, right? Okay, then perhaps you will wait for another bottom here, and then it will reverse one. Okay, so wait for another bottom. Once it reverse, that's about it. That's a bottom already. So I feel that it's very fast already. It's around these few days already. Okay, so this bottom is around these few days. So which means that we are actually looking at a bottom here. Okay, a bottom here, because it is now going down, and I wait for it to turn up. You see all these, they have a turn up one, turn up. Okay, wait for it to turn up. So now it's still going low. Okay, so now it's still going low, so wait for it to turn up. So maybe it's around this week. Okay, around this week or next week. Today is already Thursday, right? So maybe by next week. Okay, so that is one. Okay, looking at that KLCI. So if you to look at the because this one is just our local market, so usually I will hand in hand, I will continue to monitor the US market, because it is sometimes you see that Malaysia market is well, but then the US market may not be well, but that also drag the sentiment. So we have to also look at the US market as well. So I'm going to show you the S&P 500. Okay, now you see here touching. Okay, so here also touching. Okay, how many of you think that okay, so now we are looking at this rebound, right? Okay, rebound. So how many of you think that this rebound will be temporary until maybe until here, and then it reverse? How many of you think that this rebound will be all the way to challenge the 4,500 point? This rebound. How many of you think that? Okay, another question. How long do you think this rebound will be? How long? Okay, because since we are in timing cycle, right? So how long do you think that this rebound will last until? How long? Okay. Interesting. Okay, Litra say 9 months, and then Ita try say 1 week. Lily say 10 days. PY say must see if it break through the green line. It's about to break. Edmund say 3 days, and till next election. Wow, till next election. That is November, you know, the next election is in November. Okay. Hamda says that 2 months. Okay. Now, if it's a next election, it will be 1 whole year. And some say 9 months. Okay. And some say 2 months. It will last for 2 months. Okay. Now, one way to look at it is that, okay, so if you calculate the time cycle, the time cycle from here until here, right? How many months? So here we also draw this vertical line, so that we want to know the month is July 31st, and then we draw another vertical line, and then this is October 29. So it's about same last day lah, okay, end of July to end of October. So can you tell me is how many months? Yeah, it's 90 days. It's 3 months. Okay, it's 3 months. So if you have 3 months down, right, and then if you look at the previous cycle, right, you will tend to see that the up cycle here may be, okay, maybe also about 3 months. Okay, maybe about 3 months. So for example, if you look at here, maybe I give you a if you look at here from the January of 2022 all the way down to the October of 2022, right? So this January point here until the October of 2022, right? This down for 10 months, right? So how many months that we have this rally here from here until the top here? So if you see October until here, right? Do you see that the cycle is about the same? It's also about 10 months. You just look at the size, okay? If you didn't want to calculate, it's about the same. Okay, so which means that there is a chance that the next top here will be about until February, 3 months. Could be, may not be 100%. Okay, I wouldn't want to say anything 100%, well, no 100%. You have to look at the technical analysis, like what somebody say, the 200-day moving average is a necessity, right? For it to go higher and higher, it has to be strongly testing the 200-day, and then it will not come back to that 200-day within these few months. Okay, so yeah, should be declined. It could be declined also, yes, because if this 200-day moving average, you see the rejection is strong, and then it collapsed from that 200-day moving average, and then it will go down. It will go down for another 3 months. Yes, you are right. So that's why I said you have to monitor together with the technical analysis. You know the time frame, okay? But however, you need one more step. That one more step is for you to monitor together with the technical analysis, the support and resistance. You have to monitor together with the support and resistance, then only you can have more confidence, okay? You can't just say, okay, I want to have 3 months like that. No, okay? So have to be together. So you have to see that this 200-day moving average is sustainable. So if it is sustainable, it will move to this time frame. And if move to this time frame, within these 3 months, if can get higher than this previous high, then you can enjoy another 3 months of a higher high. So which means that these 3 months, right, you want to see that whether it can break this previous high or whether you can break this previous low. Okay, so which means that now November first week, today is already Thursday, tomorrow Friday, and then next week, around these 2 weeks, you will have to establish a decision. Okay, you will have to establish a decision whether it can go higher or lower. Okay, if it break down within these few days, it means that it may be down for another 3 months. You are right. However, if it's supported by next week, it is supported. Okay, I think it may go higher until February. But whether this February you can reach that high also depends. Okay, so within the next February, if it cannot break this higher high, okay, so now I'm going to draw a horizontal line to track. You see, I'm drawing all these lines is to track their support and resistance. So if I can't break this resistance within the next 3 months, it means that I will be trapped in this horizontal range. I may be trapped, okay, in this horizontal range. So then it may be dragged. Okay, so if there is anything, it's these 3 months that will set the tone for the subsequent months. Okay, it will set. So if it can move, and then it move higher. If it didn't, then it move lower. Okay, then if it move lower, then this will be a reversal. You get what I mean? So meaning that we are actually looking at a very macro view. It's not very small short-term thing. It's a very macro view, and then we try to make a direction by looking at the cycle low, and then by looking at the technical analysis, and then we try to make some forecast. But it is not always 100%, but at least it gives you a direction, and then at least it give you a signal to buy now or to hold or whatever. Okay, because if I were to look at here, I zoom in. Okay, if I were to look at here, right, I do see that there are 3 waves down already. Okay, 1, 2, 3, 4, 5. There are 1 wave down, 2nd wave down, 3rd wave down. Okay, so 3 waves down already. So meaning in terms of the Elliott wave, it completes. So now then you are doing ABC, and then maybe you go for a breakout. Okay, so this is a trend line here and a 200-day moving average here. So which means that this one complete cycle is done. Okay, by looking at the Elliott wave, it is one complete cycle is done. And then now we are looking at the next cycle here. So, and if you notice, right, each of these cycle, right, cycle low, cycle low, cycle low, each of these cycle, do you see a W formation, a W? Do you see a W here? Yes or no? How many of you see W? If you see W, you type yes. If you see a W, you type yes. So now I want you guys to monitor here. Okay, using this, okay, remember the pattern here. I want you guys to monitor here, and then to see whether here you form another W first. Okay, the reason why is because that will determine your buying entry time. So do you see how I'm using my technical analysis skill here? So I know the time now. So with the time, then I'm going to use my technical analysis to give me an exact entry point. So the exact entry point is when I see a W here. It could be a higher low. It may be a higher low, or it may be a lower low. But nevertheless, whether it is a higher low or lower low, I'm looking at buy. Okay, I'm looking at buy, so that you see a W formation. Okay, and then you are looking for that rebound, downtrend. Okay, in the long run, if let's say it is consistently below the 200-day moving average, yes, it is a downtrend. Like currently our Malaysia KLCI is below the 200-day moving average, so we are in a downtrend. But however, if let's say you are briefly below, so this is briefly below. Okay, so if you are briefly below, there's a chance that you may go higher. So if you look at 2022, okay, I show you the 2022. This one I show you this picture. Now, if you look at the 2022, right, when it was down, okay, and then there was a rebound. And then subsequently, this rebound was a weak rebound. Okay, you have to calculate in terms of the chart pattern, and then it didn't pass through the neckline, and then it reversed from the neckline. And then once it reversed, and then it go past down the 200-day moving average. And this pass down the 200-day moving average was a very deep fall. Deep fall means that it was very it fall very badly until it was so far away from that 200-day moving average. Now, the minute you see that it is like far away from that 200-day moving average, right? Basically, then only you can say that, okay, downtrend. it's a downtrend. Okay, although here they do try to trick you a little bit, it try to move up, but then it's still a downtrend. Okay, so this sets a very, very important sentiment, because the crash here, the fact that it has shown that it is so far away from that 200-day moving average, right? So basically, you can tell that in order for this to go back up to that 200-day moving average, it will take a lot of effort. Okay, and even if you take a lot of effort, right, it was very brief, and then it have to collapse. And so now we have to monitor something like this, whether something like that will happen or not, because this is very, very similar to what we are seeing now. Okay, so like what somebody said, it could be a downtrend. I agree. Okay, it could be. or it could be an uptrend also. By looking at the fundamental, right, the interest rate is so high, the reason for it to have a downtrend, of course, fundamentally is higher than having an uptrend, okay, definitely. So what I want to say is that by looking at the technical analysis, support and resistance, then you are able to keep track, okay? You're able to keep track step by step. You wouldn't to see something long term, okay? But you can see as a short term thing, okay? Downtrend, yeah, okay. So let me show you some commodities chart. So so this is the price cycle that I was showing you just now. By looking at the RSI, okay. So this is the gold chart, okay. By looking at the RSI daily chart, in this case is the daily chart. You can also look at the monthly chart of the gold. And okay, I want to teach you another is the Fibonacci time zone. And this one is also available on this tradingview.com. Okay, so it's called Fibonacci time zone, and I feel that it is also very applicable, okay, in this case. So I'm going to remove all this line, and maybe I will remove the RSI, okay, so that you can see better. So usually for this Fibonacci time zone, I will use either a weekly chart. You can use a weekly chart or a daily chart, okay? Even if I use the daily chart also can. So I can use a daily chart, and then I try to identify a cycle low or a cycle top. You can use a cycle low here, or you can use a cycle top here, okay? So then we look for that time zone. So I think it's here, Fibonacci. Maybe it's here. Okay, wait. Time zone. I think it's here. Here, okay. It's under the Fibonacci 1, 2, 3, the third one, Fibonacci time zone here. Okay, you click this time zone, and then let's say this is a cycle low. Okay, you click here, and then you try to adjust your chart. Okay, you try to adjust your chart such that you want to have the lines coincide with all the cycle top and the bottom. So here I coincide with all the tops here now. Okay, so then I try to see. Where's the top? So the top looks like it's going to be here, January. Looks like the tops are going to be in January. But this is just a guide, okay? It's just a guide, but it's not like absolute. Okay, yes. Okay, so that is one way of looking at the time zone by using the Fibonacci time zone. Okay, so this one is useful. And if you can see that I show you just now, the KLCI is about 12 years time, okay? And the Dow Jones Industrial Average is about 18 years time. There is a point of inflection, okay? Like a major top or major low. And if you look at the compounding annual growth rate in between the US and Malaysia, you see that the US tend to have more growth, okay? In terms of the performance is much better than Malaysia. So that is looking at the US. And you look at the gold price seems to have a 40-year cycle. And where this 40 years, right, it is very interesting is that you can see that the uptrend is only 10 years, but then the downtrend is like 30 years of a downtrend here. You have the 10 years uptrend, but 30 years downtrend here. And then another cycle here, you see that you have 10 years of a uptrend, 20 years of a downtrend, 10 years of an uptrend again. Okay, you see the pattern is that the uptrend always 10 years. The interesting part about the gold price is that the uptrend, right, is always 10 years. But the down cycle can be 20 years or 30 years. So meaning that if you are investing in gold, you have to be very, very patient. But why for Malaysia, we are always good to buy gold? For developing countries like Thailand, Philippines, Indonesia, you see that all these developing countries, why are these people like to buy gold whenever they are free? And that is because we are looking at the ringgit, I mean the depreciation of these emerging countries. The developing countries, our currencies is always depreciating against the US dollar. And these gold are all priced in USD. So when you buy gold, you are actually trying to preserve your gold in the US dollar. Okay, and then peg your gold in to the US dollar. So you are actually trying to preserve your wealth. So in a long time, like 20 years, 30 years, 40 years, 50 years, you're holding gold, you are always appreciating, always. And that is because these emerging countries like Indonesia, Malaysia, Thailand, all these Philippines, all these the emerging countries, our currencies always depreciating against the US dollar, always. So meaning that in a long term, okay, it is good to hold gold. And then there's a CPO price. The CPO price, you see that it seems to have like a cycle every about 7 years. Okay, every 7 years, there is a cycle high, cycle low. And now I'm going to, somebody asked me questions, bottom, top need to be long life. Can use this guide to bottom, for bottom. What is your question, Rachel? Use this guide for bottom. Oh yeah, okay. So this guide is actually the point of inflection. It could be major top or it could be major bottom. But nevertheless, you can see that it is the time frame apart. Okay. Oh, you mean the Fibonacci time zone? Yes, you can also use that as well. So you can either use that to time the top and the bottom, or just to time the top by just focusing on all the top, and then you can also focusing all the bottom, or you can focusing the top and the bottom as well. You can do that. Okay, you can adjust one. Okay. I'm going to share with you this ETS. That's one. Okay, today the market up 3 points, very slow. But anyway, how many of you have already registered as a member of this Bursa Academy, and then you have logged in before? How many have not? Okay, how many have not? How many of you have not about this Bursa Academy? Okay, so come with me. Okay, so you follow me. Okay, follow me to bursamalaysia.com. Okay, so we are going to do this step by step. You follow me to bursamalaysia.com, because this is where you can use your virtual money. They will give you 100K of the virtual money, and then you can learn how to trade. How interesting. So I want you to go to the Bursa Malaysia website, and then where you see that there are so many options for you. So you click the Bursa Academy. Okay. So you follow me, you click the Bursa Academy. Okay, click. So this is the Bursa Academy. Okay. So then you look at this simulator. Okay, simulator, there are equity and derivative. So today it is the equity simulator. Okay, I click. Okay. Because I already logged in, so I straight away come to this page already. But I want you guys to log in, right? You will not come to this page directly, because you need to register using your email address. So then they will prompt you, are you using your Gmail or your Yahoo Mail or whatever? Okay, so you can register with any one of your email address. After you register, they will prompt you to write your name and your email address, that's all. So you write your name and your email address, then only you'll come to here. Okay, so can you guys, those who say no, 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 like Wayne, Leo, and Yo, okay, so if you haven't, please register, and then only you can come to here. Okay, so if you are done, you put a done. If you are done, you put a done. If you haven't, if you have problem, you let me know. Okay, so done. Okay, very good. Okay, so now I want to teach you how to use a watch list, because if you want to trade, the very first thing you need to learn is to build your watch list. The watch list is for you to monitor what stocks you want to buy. Okay, so here I will do 3 watch lists. The first watch list is technology stocks, because I believe, my personal opinion, I believe that the tech sectors, like the semiconductors, they have come to a low point. Okay, and it's high time, it's time for them to rebound a little bit. So this rebound, whether it's a strong one or a weak one, we do not know, but at least there is a rebound. Okay, if you are on a shorter term kind of a trade, medium term kind of a trade, okay, so this technology stocks maybe is one of your watch list. And then I also have the dividend stocks. The dividend stocks are my all-time favorite. So no matter you ask me in January, February, until the December, I always have the dividend stocks portfolio. But this technology stocks is when only November month I will come out with this technology stocks. Okay, it's only this month then I'm interested in this technology stock. And then there's also another watch list is my property and my construction stock. Okay, so this is my property and my construction stocks watch list. Also very interesting. Okay, this property and construction stocks, when did I come up with? August. Okay, August. Then only I say, oh, that's this Johor Singapore special economic zone, and then all the favorable news are all pointing to a good development in the property market in Johor. So then you have all these stocks. Okay, so I'm going to share with you how to do that. Okay, so first you click the watch list, and then you click create. Okay, you click create. Oh, I have reached my maximum, but anyway, you click create. They are only allow you to have 3 watch lists, unless I delete my watch list. How do I delete my watch list? Industrial. Okay. I deleted my watch list so that I can add one more watch list. Create. So then give a name. If you want to monitor property and construction, property, construction. If you want to monitor dividend, you put dividend. Okay, dividend. And then you put OK. So once you have created, then you go to the code. Okay, you click the code. Okay, so the code will give you this code. So you can key in the stocks that you want. So then for me, I key in EcoVest. Okay, which is the property and construction. I key in EcoVest. And then you come out, and then I do the right mouse click, and it will be added. EcoVest. And then it will be like this. So I click. Okay. EcoVest. And then normally, because I already opened so many page here, if I can use this another page, because there are so many pages here. Okay, so many pages here. So I can click 1, 2, 3, 4. So I click another page so that I want to show to you. Okay, I click this. Let's say I delete all this first. and I click code. So this is my code screen. So only here I can start to add. So echo vest. Then it will give me echo vest, and then I right mouse click, and then I add to watch list. And then I add to my dividend just now, div add. Okay, they will be added. And I find another property and construction, UEMS. And then I do a right mouse click and then add to my watch list and div. Okay, that's it. Dividend. Okay, it's supposed to be dividend. Okay, Maybank. Maybank, and then right mouse click and add. Add. Okay, so that's how you add. So then I come to back to my okay. Yeah, Busa Academy is alive. This is alive. This is exactly what is happening now. Okay, so this is a virtual simulator. So meaning that this is exactly mirroring what is happening. So once you create this watch list, then the next thing you need to do is to buy and sell. Okay, so let's say you want to buy. So I have here some technology stocks here. I have here some property and constructions, and I have some dividend stocks. Now, what my approach is that I want to go for medium to long term. Okay, so your objective, must have your objective. So like somebody just now, you said that you are short term, right? So the short term will be another objective. The medium term will be another objective. Long term will be another objective. So mine is more to the medium to long term, whereby I plan to hold my position until at least 2024 or 2025. Okay, so at least 2024 or 2025. So I'm looking at, I want to take advantage of the property and the construction, because we know that the RTS project is building, right? And then there is a lot of favorable news coming in. So we want to take that opportunity to capture the property and the construction stocks until the next year, 2024. And also I want to hold my dividend stocks until 2026 and beyond. Okay, and for the technology stock, I want to hold for 3 months. Okay, let's say I want to hold for this semiconductors for 3 months only. So then I have this time frame. So this semicon is for 3 months, technology is for 3 months, and then the property and construction maybe is for 3 to 6 months, and then the dividend is beyond 6 months. Okay, so I have this different time frame for myself, and then only I will buy. So now today is a good day to buy. Okay, let's say it's a good day to buy. In terms of the semiconductors, right? I'm looking at there are already some are like picking up. So for example, this front can today seems to be picking up quite a bit. Okay, another one is Inari. Inari is picking up very fast, increased by 8 cents. And my EG very slow, and Penta also very fast. And so let's say I go for Inari. Okay, so then I will click the Inari here. I click the Inari here, and then I click twice. Okay, so if you click twice or you right mouse click and then you click buy, also can. So you click buy, and then this green screen here will pop up, okay, which is here lah. Okay, the green screen here will tell you what to buy. So here you have chosen Inari, and how much I have? 92,000, because I already used up 8,000, so I have 92,000. So I want to buy at what price? Then you see what is the queuing price now. So for Inari, the buy price, the last price is 2.9. Okay, and the bid price is 2.89 and then 2.9. So it's either 2.89 or 2.9. So tell me what price you want to key in. 2.89 or you want to key in 2.9? The last done is 2.9. 2.9. 2.89. Okay. So for Lily, 2.9 means that you want to get it immediately because you don't want to wait. Okay. And then for Liu Chua is that Leo you want to buy is because you want to buy you want to queue. Okay. So how to create stop loss? Okay, wait now. I think this one do not have a contingency order. They do not have a contingency order for this one, so you can't click the stop loss. Yeah. But anyway, let me show you the buy first. So the buy is that you buy at the 2.9 and the quantity you buy 1,000 shares. Okay, so 1,000 shares is 2,900. Since this is a free money, you can say, okay, I'll buy 100 lots, which is 29,000. Okay, no, I just want to have 1,000 shares. Okay, I don't want to buy so big. I want to save the money. Okay, so I just want to buy 1,000 shares and then you click buy. And then you check your order. Is it okay? Yes. Click buy. Okay, so you submitted the order. So you can see that this buy is only buy and sell. There's no contingency order. In fact, most of the platform, right, unless yours is a derivative platform like options, futures, this kind of a derivative platform will have a contingency order. That means you can do the stop loss, okay, stop buy, stop sell, okay, you can do that. But however, for majority of the equity platform like CIMB, Affin Huang, Public Bank, M&A, all these, right? I don't think they have a stop loss. Okay, I don't think they have. Okay, but anyway, they only have a buy and sell. Okay, so if you want to sell, then you have to do a sell order. So let's see if I have bought it. So you go to the order. Okay, my order status. So then it will pop up. So then my order status is here. I buy, and did I match? Oh, I haven't matched. So that means the price went up already, is it? How come I didn't match? I didn't get it. Let's see. Inari is 290. Okay, so it's selling, but then it's still queuing. Okay, so it will be sooner or later, it will be matched, but then it will take some time. Okay, so usually we will be matched almost immediately, but in this case, it is still queuing. Okay, so we'll just wait. So that's how you buy. So after when you buy, then it will be included in your portfolio. So this one I put down, and then the portfolio is here. So you can see your equity portfolio. Yeah, so you can see that I already have previously I bought all these stocks. Okay, so it's all the different times when we had the ETS session with the audience, then I buy together with the audience. So far I have bought Gas Malaysia, I have got KGB, I bought Top Glove, all this. Okay, so and it looks like the Gas Malaysia seems to be doing well because these are dividend stocks. Okay. Okay. So any questions on this one? So is this very simple? Okay, how many of you want to trade this virtual trade? How many of you? You want to use this and then you want to trade already? By learning my RSI technical indicator, okay, probably you feel that, hey, is it you want to like make some try out whether this strategy will work. Okay, so before you try into the real market, you can always try into this virtual market, because in this virtual market, then only you will test out the strategy, see whether they are working. You can try out the RSI, you can try the 20-day moving average, all this strategy, and then you see whether they are making for you. So if it does, then only you can go on to the real world. Click the limit, maybe have stop loss. Oh, click the limit. Okay, wait now. Okay, wait. Click the limit. The order type Okay, let's say I click the inari again, buy. Okay, click the limit. No, I don't have. It's limit order. I don't even have a market order. In the normal, you do have a market order, but in this case, you only have a limit order. But it's good. It's good enough. Okay. But what you can see is that, okay, let me give you a scenario. So for those of you who are new, you wanted to know how to do the stop loss, right? Because some of the Forex trading platform and the futures derivatives trading platform, under this order, right? Buy, they are buy to open, sell to open, buy to close, sell to close. Okay, so this is just a buy and sell. There is also like buy to stop. Stop means stop loss, sell to stop as well. So those are the contingency order. So this buy to stop and sell to stop is when you have already have an order. So let's say you have already bought an order. Either you can immediately put a stop loss order immediately. Okay, either you can do that, or after you have submitted the order, then you have to do it another order, buy to stop, sell to stop. Okay, so that is looking at the stop loss. So meaning it will be another order, but the keyword is buy to stop or sell to stop. So that is a stop loss order. Okay, yeah, it's only for sell. Yes, yeah, that's right. Okay, so when we come to here, let me do a recap of what we have learned today. So today, basically, we look at the time cycle, okay, analysis, whereby we are looking at how to time the market and by using the RSI indicator. And this RSI indicator is not absolute, okay? You have to use together with the technical analysis, the support and the resistance. So like what I have shown you, okay, the support and resistance, you can see that by looking at the support and resistance, you'll be able to see whether they can maintain a certain level. If they are able to maintain a certain level, then they can go higher. If they can't, then they will go lower. Okay, so these few days, this week, today, tomorrow, and then also next week, these few days are crucial day because it will give you a direction, okay, for the US stock market as well as our KLCI. Okay, so let me answer your questions, Q&A. Is it good time to buy gold? Yes, good time to buy gold. Why? And that is because if you look at the current situation, right, the more war you have, the more war you see, right? In the future, it will be more and more unstable in the political world. Okay, there will be a lot of wars, small wars, big wars, all break out. So when you are in a highly unstable environment, right, what are the two things that you need to invest? Number one, invest in the gold. Number two, invest in the US dollar. Because when everybody feel insecure, right, then they will go to the safe haven. So the safe haven will be the USD and the gold, these two. Okay. Then which indicator is the best used together with the oscillators? Oscillator means the RSI and the stochastic. Okay, so I would like to use the trend line together with the oscillator. Okay, so I will not use, maybe another indicator will be a moving average. That's all. Okay, so if you want to use together with the RSI, you can use a moving average and then together with a trend line. Okay, this will work hand in hand. And for Annie's question, could you provide example of how historical data can be analyzed using the oscillator predict future market trend? Okay, so this one, I believe on my slides, you already saw FCPO, the gold, and all those. So those are the historical data. And Annie asks again, given the volatile nature of today's financial market, how can traders adjust their oscillator-based strategies to adapt to rapidly changing market condition and minimize the risk? Okay, given how can the traders adjust their oscillator-based strategies? Okay, so I would think that given this, you can look at your own self. So whether you want to go for short term, medium term, or long term, if yours is more on the bigger picture, long term, you can always use the money chart. Okay, and then if you are using if you are short term, then you can use a daily chart. Okay, so it depends on yourself what you want to what is your objective. Are you going to hold it for a short term? Are you going to hold it for long term? So if it's a short term, you can always use a short term chart, either a daily chart, or usually I will use a daily chart. Okay, then Trevor asks, is physical gold or gold bought through the bank better? This is always a question that is asked by the audience. For me personally, I prefer physical gold. Okay, so I in previously, when there was no luxury tax, I would I would buy gold. But now there's a luxury tax. Maybe you can ask the gold jewelry shop whether they can absorb the luxury tax or not. Okay. Otherwise, we have to pay for the luxury tax. Otherwise, alternatively, you can always buy the virtual gold in the bank, like a CIMB bank or the public bank. They have investment gold account, so you can always buy those, but those are not physical already. Those are just investment accounts, so meaning that if there's anything you can't take out the gold, there's no gold for you, you just have that virtual account only. Okay, so that's why I think the physical gold is still the best. Okay, Wayne asks, how do you see the accuracy of the stochastic and RSI versus the RSI? Okay, if you look at the I show you the RSI and the stochastic. Okay, these two I show together side by side. Okay, if I show this together side by side, right? Do you see that the RSI is more smooth? Okay, so it's more smooth in a way that easy to identify the bottom. Whereas the stochastic, right, you see there are so many bottom here. Okay, so you see that this stochastic is less obvious, but the RSI is more obvious, clearer. Okay, it's clearer to you. So that's why I prefer the RSI. I think I answered everybody's question, right? Have I answered everybody's question? If I haven't, you can type again. Okay, but I believe I've answered everybody's question. Okay, I can pass back to the host, Kaiman. You are muted. Kaiman, you are muted. Still muted, can't hear. Can. Oh. Okay, hello, Calvin, Tang, and May, Wayne. Okay, hello. Okay, very good.
So I think, yeah, hopefully you guys can hear me better now.
Yes, can hear, but
Okay.
cannot see you. No, can.
It shouldn't happen. So it's fine. So yeah, I would say thank you very much for everyone for joining for today's session. We do hope that everyone can manage to get something out of the session. All right. So once again, thank you so much, Pauline, for such a wonderful, sharing regarding on this topic on oscillators. So once again, thank you very much for tuning in. Right. So that would be the end of the session. Let me just stop the recording first.